All right. Good afternoon, guys. This is Cedar, and we've got Shadow here for Mind Over Matter, the psychology of trading. Had to readjust the schedule a little bit yesterday for what we typically do for Wednesdays at lunch for Eastern Standard Time. So I am recording it. There are, I think a year and a half worth of recordings on my YouTube channel. However, what we try to do is address this week what we're seeing traders struggle with, what we're experiencing, kind of the on the cutting edge of where we are in the market. So that's why we do them ongoing and not just have like one recording, like here's all our thoughts, go listen to it. It's supposed to be about you. So I would love to see any questions that you have. And we do scan the chat, kind of pay attention to what we're seeing, what frustrations there are. And I've got a couple notes. Um, but Shadow, I'll let you lead off with what your thoughts are on what you're seeing right now.
Well, for me on the higher time frame, we've broken down. Broken the bearish trend line on the futures ES, and we are actually outside of the range that we've been making the last 2 days.
So a little bit of
We have,
character change, right?
I'm leaning towards bullish. I had a confluence zone on ES from 52.12 to 52.16, where support and resistance tends to flip back and forth between two major supply and demand zones.
And it's
And
about the
we
big
got back
picture,
above
right? High time
it. Yep.
frames.
Yep. Higher time frame on the 1 hour time frame. And so far we're respecting it. And then, we have next major supply zone all the way up until we get up to about 52.50. So, and also right here on the volume profile, the last 30 days is actually a very low volume node, extremely low volume node.
That
So
that needs a little
around this
repair.
52. Yeah.
Yep. And what we do is we're trying to look at things from a data range, from a analysis perspective instead of from a I have to make money today perspective. So when you hear us talking about analysis, yes, I make my living trading. I need to make money. However, I don't have to make money today because I am not oversized and I'm consistent and I've proven, with 70% win rate that I know my metrics will be profitable over time. When you approach trading from a money perspective, from a dollar signs in your eyes, instead of the technical piece, right, of where are we? What are we doing right now structurally in the market? It usually is a pretty good indication that there either is some financial stress or something going on that could potentially interfere in your decision-making processes as a trader. So Shadow, you're doing some contract work, but you're primarily trading for a living as well, right?
Yeah. So I everything, I should say, imbalance balance.
Right, right. And I still have my training company that's online now, but it's not, I mean, it's because I can't fire the personal training clients that I have because I've had them for so long. And so, we just keep balance. It's imperfect balance. Exactly.
And some days, and it's some days are harder than others. Like yesterday was really rough, uh, just because the market condition
Yeah.
was reminded me of a market condition a year ago where we had like a lot of liquidity grabs back to back, and and then on top of that, I kept getting distracted with work and had to kept stepping away from the computer, and then um, and it all plays a role in it. But even then, it was just a few trades yesterday, and
Exactly.
and not blaming my job, not blaming kid, not blaming anything, just saying, hey, these things happen. I, you know, there's going to be liquidity grabs, and they come and go, and I just the setups were solid that I was entering. It's just they just got wicked out,
It was
and
definitely
instead
some
of
some crazy price action. And we talked about that a little bit, headed into the day. Even that's why we try to give that feedback is sometimes I can't be around, but most of the time if I'm not trading, it's because I don't want to. It's because I don't choose to participate in what that is. Sometimes you'll see me say, dang, I missed that entry. That would have been a textbook like cedar entry right there. That's how, if you go through my new traders boot camps all day long, that was right there. Versus we want to contrast what the reality is for most people. There is what Shadow's talking about, busy with work, and you're at a desk or you're doing something else that distracts you away from the market. And the idea is to find a balance in there. So if you're constantly worried about, oh, I missed the move, and then it creates stress, there's going to be a problem. So you always want to just be focused back on when you sit down, not focused on getting in a trade, but sit down with a fresh analysis. So if something happens, because I start my day fairly early, I've gotten up at 4:30 a.m. Mountain Standard my time for 20 years for my fitness business. And even when I stopped training those sessions, those early morning sessions myself, I still just automatically wake up at that time and haven't been able to change it. So I start my day pretty early. I get my workout done. I do my market prep, try to get a little morning sunlight, have some tea on the porch. Haven't drank coffee since COVID, strangely. I can't drink coffee anymore. It makes me sweat. There's the rooster on cue. And it's probably better if you're trading not to drink a lot of coffee. Just saying, a little bit of coffee jitters, it makes you hit that market in, market out a little faster than you maybe should be doing. But coming into the market prepared and relaxed instead of in a rush. So I woke up late. My alarm didn't go off. And I remember you talking about that a couple days ago, missed or went back to
Yeah,
sleep. It wasn't that the alarm didn't go off, but you slept in, you chose to sleep in, and you don't rush into a trade when you do that. If I have to go to an early meeting or have to do something that takes me away from being able to trade, I don't come back, sit at my desk and go, I have to be in a trade. I say, all right, let's see what's been happening. Let's see how price has been moving. And because you can't see that from looking at the static candle, and I've been talking about this for the last couple weeks, really actually probably the last couple months, about how we're seeing huge price moves in the 1-minute candle following the 30-minute rollover. And it makes a beautiful 30-minute candle, but when you're on the smaller time frame, you can tell it's really jerky. So right now, if I'm coming back to my desk, I will do a replay in a 1 minute to just see how price has been moving to get a feel for it. And I personally do not look at the 1 minute other than to mark. It's really funny that this rooster, we talk about this all the time. He has not crowed like 3 times the whole morning. And now we've got what, 10? That's awesome. He's announcing to the world that he's here. So that 1 minute chart is only useful for me as get a feel for what the tempo is. If I have missed out on watching how the price is unfolding, so feeling the PA. And then also to mark things like I have marked the 1-minute range on data like the jobless. Say it again.
I didn't mean to interrupt you. I'm
Okay.
out at 52.20.
No, you can always, alerts can always. So beautiful, beautiful long trade there. That was off that IB high.
Yeah,
Excellent,
that was beautiful.
excellent execution. And it looks like that you exited right at the T+2 high of day test. Yeah. Couldn't ask for better right there. Okay.
Sorry, go ahead, Steve.
So when we're thinking about how we set our day up, you want to make sure that you're not coming in with stress. You're not coming in with anticipation of what's gonna happen, what's gonna unfold. It has to be focused on, I'm here to see if my edge is present. And if it is, then you can execute. There's times I walk in, sit down at my desk and go, there's my setup. I would have had to wait for that for 2 hours, but it's right there. Look, it's magic. But then there's times I come in and I'm like, well, I missed the move of the day. That's the end of that. Now there's nothing, because now we're in the doldrums, basically just no wind in the sails at all. And so without having any expectations, you're going to have a much better experience trading. I mean, just hugely different from time to time. So not having to have something from the market, but taking it. It's like walking by a fruit tree. Just because you want an apple and it's an apple tree doesn't mean there's an apple. It's the right time, the right ripeness, and the birds didn't eat it, right?
Or worms in it.
Probably worms in it. And it's going to be the best apple ever if it has the worms in it, but that's another conversation for sure. So I wanted to talk a little bit about timeframes and why I don't use the 1 minute chart as a primary. I know people who trade off the 1 minute. I know people who trade off the 30-second. I don't think there's enough Xanax in the world for me to watch a 1 minute chart all day long. I'm already kind of a high energy personality. I don't need to have extra jitters going on as far as how I am having the visual input of that chart moving like that. It does give you a pulse for things. If things slow down and get in a really small range, I will let you guys know if I switch into one, but it's pretty rare. I think I've probably done it 5 or 6 times in the last 3 years of being in Discords. So I'm trying to communicate as much as I can why I'm switching. And I really have settled in that people need to be watching a 30-minute as a minimum higher time frame, which is why it's what I stream as my 30-minute execution chart. It's also what the TPO profiles are based off of. So it's a little blend between market profile, TPO, and what I've done, aggregating a lot of things that I've learned in my 22 years of trading. And I haven't traded full time for 22 years, but I've been trading since 2002. I started with QQQ options in February of that year. And I have played with every time frame on the charts. I have traded 1 minute, 2 minutes, 3 minutes, and finally realized that if I didn't want to be scared out of my positions and miss the bigger moves, I needed to have the bigger view going. If I don't have a bigger view, all of a sudden, I took 3 points on a 17-point move on ES. And I'm like, the heck? Because of one profit-taking candle, because somebody dropped 100 contracts. So I use the 5 minute as my smallest time frame. That's the 10MA 5-minute protocol in the New Traders Bootcamp. And I also keep a 200 moving average on it because a lot of other traders use it. And I didn't believe in it, but it's a very, very relevant metric. And then the 30-minute, and then I go to 4 hours daily and weekly. And those are up on my screens at all time. And I keep my execution chart with the anchored VWAP from the session open, from the Globex open, and the last 2 days worth of execution levels, things like volume point of control, value area high. So that's the crazy chart. But I have clean open charts that are just candles with some really, really basic information like a 10, a 50, and a 200 moving average. And that's what we focus a little bit more on in the Lunch and Learn on Tuesdays at noon. But I want to go back to that concept of you have to make sure that you're not stuck in one mode, that you're not going to sit down and automatically be in a trade, that you're not going to, constantly just be looking at a 1 minute or a 3 minute or a 5 minute chart, that you have that bigger picture. And I was talking about this morning. We're in a gigantic bull flag on the daily, and everybody and their dog is short. And guess who's fueling the continuation of this bull flag? If you're short right here, or have been short, who's probably created most of this, they're continuing to cover. So making sure you're seeing that bigger picture and starting to think about the context of where other traders might be positioned can make such a big difference. Instead of just thinking, I need to make money today. You're going to make money if you execute well in relation to the things that you're paying attention to in the market. And as you're learning and growing as a trader, it's really, really important that you're thinking from a bigger picture perspective, that you're really trying to go, what else can I learn? And I'm not saying go find 50,000 more indicators. I'm saying
No.
Don't test out 50,000 more things. I'm saying expand your concept of what you're looking at and your thought process about what trading is and who's driving those trades. This kind of leads me into something that has been an ongoing thing. I started prop trading a couple years back and really brought it to our previous Discord. I brought futures to the previous Discord and prop trading in general. And I want to talk about how the disaster that I'm seeing kind of unfold around what people are doing with prop firms. And I love the idea of it. I actually took half of my main futures account and redeployed it into other avenues because of my prop could replace that ability to make that income. However, what I'm seeing a very huge propensity towards is people trying to pass 20 accounts and maybe passing them after a couple, 2, 3, 4 tries. And that's to the tune of, you do 20, 50Ks, that's like $600, $700, even at that discount. So blowing that over and over again. So let's say it takes you 3 times to do it. Then you pay the PA, then you blow the PA. So the PA costs you 32,
like 150.
yeah, 160 on a 50K on Apex. So you have $3,200 tied up in your PAs, and however many times it took you. So let's call it $1,800. So now you've got $5,000 tied up in this set of PA accounts that you blow before the first month, and you don't even take a payout, or the first day, because you try to trade the PA like you pass the evals, but it took you 3 or 4 times to pass them. And it's frustrating me a little bit, because yes, I understand I've got prop accounts and I trade them. That doesn't mean everyone should. And I love the idea of the prop because you're not losing your own money. But think about that. If you did that scenario that I'm talking about right there, one time, you could have just taken that $5,000 and put it in a Trade Evade account and put risk management on it and say, I can trade as 5 MES, and my max loss in the day is $500. Boom. It would take you a lot longer to blow that money at $500 a day, because you probably wouldn't keep doing it over and over because it will lock you out. And it would be your money and it wouldn't be contractor income. So I want to really try to put the brakes a little bit on this massive, I've got to have 20 accounts, and reset the thought process about what the purpose of a prop is. The purpose of a prop is to give somebody that doesn't have a lot of capital the ability to be able to trade, or in my instance, has the capital, can put it somewhere else and use that in place of it or part of it. So I'm going to kind of dig a little bit into what I think the strategy should be on how you build up if you want to have multiple prop accounts. And you really don't need to have multiples. You can be hugely, hugely profitable on one that you build a beautiful cushion on, and then can trade up to your max contracts once you have a big cushion on it. So what I'd like to see people doing is pass one eval or one combine, depending on the company you're using, and prove to yourself you can keep that after you've paid the PA fee or the XFA fee, that you can keep it for a month, that you can take a payout and not blow the account after you take the payout. And you use that money to open the next account if you want another one. And repeat that cycle the following month while you're continuing to build up that buffer, so that you're not having those big dollar signs of, I want to see all of this money made. It's more, I'm looking at the consistency, I'm looking at the actual execution that I'm performing in relation to this, because it's kind of the same thing. If you can't trade a $10,000 account, you won't be able to trade a $100,000 account. Like, putting more money in is not going to help you. Now, there is to some degree some regulation in my mind as far as how that goes, because if I put $500 in and can't trade it, it's because I can't properly size it how I would in a $10,000 account. So, I really think a couple grand is probably the minimum that somebody would need if they were starting an options account. And probably we could even say the same thing for a futures account. So $2,000 on a futures account can trade 2 MES if you've got the right risk parameters, risk settings in there, so it locks you out if you aren't doing the right things. And of course, the self-control to manage the options account the same way. So slowly building it up is not a bad thing. Slowly building up more prop accounts, if you choose to, is not a bad thing, but you got to prove to yourself that you're not going to just go blow it. So if you're passing them in one day, or the 2 days that some will allow, you have to understand that that's their business model, and they're making a lot of money on you blowing them over and over again. And that is not the point of them. The point of them is to allow you to be able to diversify your risk. It's not your capital at risk, but it is if you keep blowing them. So, Shadow, tell me how you approach your prop firms, like kind of how you got started with them. Because I started with one, purely one, and I had that for 6 months just to decide if I was even gonna do anything else with them. So I definitely took the slow route, but I've never heard you tell the story about how you got started and, accounts and stuff like that.
Well, when I got into futures, it was I was using TOS, but I wasn't trading on TOS. And I was looking for brokers to trade on other than TOS, just price comparison. And then came across a link about funded accounts, and then this was, you know, beginning of last year. So we didn't know as much as what we know now,
Oh yeah.
and I tried all kinds of different ones, and I spent a good amount of money. Um, and by the time I got it, figured it out, and I found Apex, and then started trading their funded accounts. And I looked back and I thought about it, I was like, wow, I spent so much money
Mm-hmm.
when I could have just funded my own
Put
accounts.
your own money in.
Um,
Yep.
yeah, and at the same time, that comes down to ignorance too. Like I didn't really understand that ME or MNQ, the micros.
Right, right.
Uh,
Oh, that was my very first thing. I went in,
so
yeah, my
uh,
very first Top Step was I went in, had no idea what was going on with the platform or any of that stuff. And it was like immediately, I think it was like 30 seconds or a minute, and I'd blown the account. And I was like, I didn't hold on, what happened? So there was my
yeah,
one half price reset or whatever. But yeah, the ignorance is a very valid point. Coming into
and it adds
trading
up
ignorant
so
is
quick.
not is so scary. Like you can lose so much money.
And so and it, the evals and stuff, not realizing too, like like I said, I was kind of ignorant to futures too. Like I didn't know about the minis and all that too, and over time, I was still learning futures. So it was not a good funding accounts while establishing futures trading and learning it out and trying to build a good risk management and strategy system. And it just burned through money pretty quick. But and it took a few months to finally get it down and right. Um, but my rule of thumb was I didn't add more evals until I got a payout. And then everyone that I've helped too, I've always, said, hey, don't just be throwing, money at the wall and stuff or in the fire. Just do one account, manage it right from eval to PA, and then starting off at PA, maybe start off at half risk than what you did on eval until you get to like a profit goal or a point goal, and then start increasing your risk to what you were using before. And then when you get your first your first payout,
And that's presuming
um,
you weren't max size for what the actual
oh,
contract. And that's what I'm seeing people do is they're, max size, they pass it in 1 day or 2 days and then can't get their head around the concept of needing to now I have to trade this like a real account. So I suggest trading one micro of whatever you were trading because then it is more like real money once you move into those express funded or the PAs, and there is a different psychology, and it's not real money, but in your mind, I mean, it's a similar kind of response.
yeah.
Looks like
And then the
UVXY
other
is getting
reason
some buying
I
here.
like adding a eval once you have a PA and you got a payout is that your mindset now isn't about trying to pass the eval as quickly as possible,
Hmm.
especially if you're using your trading or trade copier. Your focus is on your PA account, and your eval is just playing along. It's
It's
just
following. Yeah,
doing,
I like that a
yeah.
lot. Put it in a group. Yep.
So you're not sitting there trying to turn these evals over and over and over. You're just your PA like you normally do, and eventually a week, 2 weeks, however long it takes, your eval will just become a PA, and then that's just going to add more to your payout. Start doubling your returns.
That's how the multiplier works right there, guys. So it's
Hmm.
really important that you're not slamming into a bunch of them trying to pass five at a time, whatever it is that's happening, because I'm hearing a bunch. And it's not just, I mean, it obviously hear from members, but I'm seeing it across the trading community. even going into their discords, it's a train wreck. It's, and that's the last thing I want to do with talking about any of them. So, I'm even hesitant to even mention names because I do think that there's some shadier companies. My props are Apex and Top Step, but I'm not saying that to go like get you to go do them. They had a purpose for me. They have a purpose for Shadow. If you are finding that that purpose is that you got to make money, you should be not anywhere near trading if you got to make money. If you're looking to add an additional stream of income, then trading becomes a more appropriate thing to add. It is the hardest thing you'll ever do in your life to learn how to trade, and it's not something that you're going to be successful at overnight, even moving from options to futures. Now, for me, as I transitioned, I've traded futures in the past a long time back when my kids were little and found that I was in front of screens too much. And so I went to options because it limited me to trade during RTH. So now that they're grown, 19 and 22, for me, it was kind of a natural, like, get back into the groove of it. But the last thing you want to do is, if you don't have good self-control and you don't have your edge defined, your ability to be able to execute around that edge, is go start throwing money at something you can trade 23 hours a day, 5 days a week. It'll get you. So really focused back. This is the purpose of the psychology risk management kind of concept that I focus on so heavily. And I think the reason we're all here, that would be my guess. It's definitely the reason I chose to go ahead and open my own Discord, was to be able to continue that concept of, yes, here's how I trade, but more importantly, how do you figure out how you execute and how you operate your brain? Because that's really what it is, right? You have to figure out what the controls are, what the triggers are. And sometimes there's a sticky gas pedal, and sometimes, there's some problems with the exhaust. If you think about it in different contexts, might not be running as efficiently as it should be because it needs new spark plugs. Your brain might need some tune-ups, and that's why I want to make sure that we continue to do this Mind Over Matter session. So I am running close on time, but I want to thank you guys for being here, and make sure you're asking us questions and giving us feedback about how you're doing, whether it's struggle or success. The important thing is that we're carrying forward the fact that you will be successful if you're consistent, if you're persistent, as far as getting your head straight. It is all a head game. And it goes for the same thing with my personal training clients. It's all a head game. Getting healthy is how you think about it. I get to eat food that tastes healthy, or that tastes good and is healthy. I get to be able to trade at my leisure. If I have something else to do, I can step away, as opposed to being tied to a desk. It's the same concept. We want to make sure that we're not filling our diets with junk food and YOLO lotto trades. It's basically the same thing. Kind of entertaining, but it's probably going to cause you problems down the road. All right, with that, I'm going to wrap the session, and I'll catch you guys back on voice in about 30 minutes. Thank you, Shadow.
Thank you, Sia.